So good evening students, welcome back to my channel. Okay, so I have done many sums in hire purchase system and installment payment system. Okay, so the last but not the least topic is GST. Okay, GST in hire purchase and installment payment transactions. Okay, so you just see, what do you mean by GST? GST means goods and services tax. Okay, it is a tax which we pay, okay, or it means, okay, tax on supply of goods and services. Okay, supply of goods and services. Suppose you are a manufacturer. Okay, you are a manufacturer. Now on the purchase of goods, okay, you have paid tax, yes or no? So that tax, okay, that tax is known as GST. Okay, it is a tax on the supply of goods and services. Okay, so when you are a purchaser, okay, you pay tax. Okay, and when you are a seller, okay, you receive tax. Okay, so there is a set off. Okay, there is a set off between the payment of tax, okay, and the receipt of tax. Okay, so that is known as input tax credit. Input tax credit. Now, okay, the main topic is, what do you mean by input tax credit? So first of all, you just know what is input tax. Input tax means it is a tax which is paid on the purchase of goods and services. Suppose you are a manufacturer today, you have purchased some items, okay, and paid tax. So that is what? Input tax, because you have brought goods and services, okay, or brought goods into your business, okay, so by paying tax. So that is input tax. What is output tax? When you receive tax, when you collect tax by the sale of goods, so that is output tax. Okay, so you see, what does input tax credit means? It refers to the tax already paid by a person at time of purchase of goods or services, and which is available as deduction from tax payable. Okay, so input tax credit means what? Whatever a manufacturer pays for the purchase of goods, okay, and whatever it collects or he collects from the sale of goods, okay, it is a difference between the two taxes, between the input tax and output tax. That difference, okay, that difference is deposited into the government treasury, okay, in cash. So that is input tax credit. Okay, so you see, you are a manufacturer, okay, there is an example, tax payable on output final product is rupees 450. So on the sale of the product, okay, the manufacturer is going to receive rupees 450. Tax paid on input purchases, and for the purchase of the product, okay, how much tax is paid by the manufacturer? Rupees 300. So the difference between 450 and rupees 300, that is rupees 150, okay, is deposited to the government treasury. Okay, you can claim input credit of rupees 300 and deposit the rest rupees 150 as taxes to the government. So the difference between the output tax and the input tax, 150, okay, is deposited to the government treasury. Okay, so here the manufacturer can claim an input tax credit of rupees 300, that he has paid rupees 300 for the purchase of the product. Okay, so he will he can collect more from the sale of the product. Okay, that is, he has collected rupees 450. Okay, the difference between the two, 150, is deposited, okay, into the government treasury. So that is input tax credit. Okay, input tax credit. You can claim input credit of rupees 300. Okay, it's a claim by the manufacturer that I have paid rupees 300 and I want rupees 300. Okay, so that is said in input tax credit. Okay, and it's a very important topic in GST part. Okay, so you should know it, input tax credit. Now there are three more points which are important in hire purchase and installment system. So what is said in note, ITC in hire purchase and installment system cannot be claimed. Now ITC cannot be claimed. The manufacturer cannot claim ITC when the capital asset purchased is used for production. Now capital asset used for production is, it can be machinery. So machinery, once it is purchased, it is not sold. It's a capital asset kept in the business for production purpose. Yes or no? So when there is no sale, no tax can be collected. So there is no matter of ITC over here when the capital asset is purchased for production. And sale of exempted goods, there are some goods which do not have any taxes, no taxes are paid, okay, for the purchase of those goods, exempted from taxes. So on those goods, okay, on the sale of those goods, ITC cannot be claimed because there is no taxes only. Okay, no question of taxes comes here. Then again, the capital asset purchased is building. This is number 2. Now capital asset purchased is building. Now once the building is purchased, it is not sold out. Okay, it remains with the purchaser. So no sale, so no collection of GST and no question of ITC comes over here. Okay. Then you see point number 3, the capital asset is motor vehicles purchased by non-transport enterprises. So motor vehicle is again a capital asset, yes or no? So it is, if it is purchased by non-transport enterprises, okay. So non-transport enterprises means what? Those enterprises, okay, which are not dealing in transport operations. Okay, transport operations. So in that case, motor vehicle is what? Okay, it is a capital asset. It is not sold out. It is not meant for sale. Yes or no? It's a non-transport company. If it is a transport company, then motor vehicle purchased will be sold out. But it's a non-transport company. So motor vehicle being a capital asset, okay, motor vehicle purchased will be a capital asset, and once it is purchased, it will not be sold out. Yes or no? So there is no collection of, okay, GST and no question of ITC comes. Okay, so these 3 points are very important. Okay, you should know that when ITC can be claimed and when not. And what is ITC? I have explained you with a suitable example. Okay, so this is all about GST in hire purchase and installment payment system. Another 2 points are very important. That is the matter of interest, okay, accounting treatment, okay, of interest and depreciation, okay, in hire purchase and installment payment system. Okay, so that we will come to know in our next class. Okay, so thank you for today, and new viewers, please subscribe to my channel, okay, share and comment.